No single data point will tell you the full story. Unstructured sources like court cases, legal data from your Supreme Court, High Court, Magistrate Courts to maybe even FIR level. So you bring all of these data points together because it is a combination of all of these that creates a very powerful proxy for the BFSI segment to understand the overall business and financial health of the MSME.
Welcome back to this exciting new episode of Fintech Ki Baat Dil Se. Today's episode, we have with us Mr. Mohan Ramaswamy, who's co-founder and CEO of Rubix. And this is our second segment, Dhandhe Ki Baat. If you haven't yet, please go back and watch the first segment, which is Founder Story, wherein Mr. Mohan has shared his really inspiring story about how he built this company almost 9 years ago in 2017 and started off in 2018. He's taken through the journey of entrepreneurship, and he's also shared some tips on, for budding entrepreneurs out there on the screen right now. So stay tuned for that. Mr. Mohan, it has been a pleasure having you here, and thank you so much for sharing the insights that you did earlier.
Thanks.
Having said that, this segment, Dhandhe Ki Baat, we would love to deep dive with you in the realm of data science and its use cases across industries. Before that, let's start off with Rubik's data science.
Yeah. So essentially, the idea, I mean, while I touched upon it a bit earlier, you know, like I said, Rubix is a technology-enabled information and analytics business, right? So
Right.
the primary idea of Rubix was it was built to bridge the information asymmetry in the
Mm-hmm.
B2B ecosystem, right? So especially in India, where reliable financial data is scarce, right? So it's scarce because the public and private limited companies have to file with the ROC, but proprietorship partnership firms don't have to file with any central government body at all. So at Rubix, what we try doing through the tech platform that we built is we provide decision-ready insights across KYC, compliance, credit risk, supplier risk decisions that the BFSI or the corporate or any other institution would want to take, right? So our core value proposition has always been the one where we convert fragmented data into single actionable risk view, for our customers, right? So they were, I know, since we've been in this industry for decades now, it used to largely be, in the previous times, it used to largely be the decisions used to largely be taken basis static reports on companies and businesses, right? However,
Mm-hmm.
what we have done using technology is to move from static reports into dynamic, continuously updated risk intelligence that enable our customers to act almost in real time, right? So today like I said again, I mean earlier, today we support corporates, banks, insurers, and other financial institutions in the entire life cycle, right from onboarding when they onboard a customer or a supplier or a vendor to risk assessing them either for credit or for business risk or for compliance risk or what have you, to monitoring them. And for corporates, we've gone ahead or we forward integrated it also into enabling collections, for their outstandings because we have insights on the entity, so we know whether we are likely to get the money, and if yes, what is it that we need to do so that we can collect the money on behalf of our customers.
Understood. No, I think that is really interesting, and this seems like it has really widespread use cases across multiple industries, right? Since we are focusing on BFSI today, let's kind of pick up a few use cases across the domains of BFSI, and see how it fits in, and probably let's talk about the most impactful use cases across each domain. Let's start off with lending. And why don't you kind of take us through a couple of use cases that you've worked on in lending where you've seen the highest impact of this? And probably we can talk about how the upside has been for the customer as well.
Sure. I'll also give some context here for the
Sure.
benefit of the viewers, Shreyas. So,
Hmm.
see, India is one of the fastest growing economies, right? At the same time, we are also even as we speak and as we are doing the podcast, we know about the kind of geopolitical risk and supply chain risk as a result of geopolitics that the entire world is witnessing today, right? However, there are businesses, there are countries that want to move ahead. If you look at India, the aspiration is to hopefully become a superpower power one day, be in terms of GDP, be amongst the top three, if not the first, very soon, right? And for that
Mm.
to happen, that will happen only when we see banks, fintechs, and financial institutions transact more, lend more, to businesses, right? And even businesses will need to invest organically or inorganically for them to grow, right? And for that to happen, and you look at the lay of the land as we speak today, India is a country where you have almost about 60 billion credit active businesses, which means these are businesses that needs credit either by way of bank credit or by way of trade credit where corporates, transact business with them on credit, right? So the
Mm-hmm.
numbers are astounding. So, when something like this, so imagine a fintech or an NBFC or a bank, and if they want, when they have to expand their portfolio, when they have to grow their business, they have to look at ways and means of lending to the sole proprietorship and partnership firms, right? Of course, you will get your meat from, of course, the large corporates and the mid-sized corporates that are which are established in terms of their credit worthiness. But for their portfolio to grow, they will also need to look beyond just that piece of the, segment.
True.
Now, when you come to the sole proprietorship partnerships, the traditional underwriting models don't work. They break down in such an environment, right? Because the key challenges there being lack of audited financials, informal cash flows, you know what I mean by that, and
Mm.
limited bureau coverage. They may not have their transactions with any of the credit bureaus. So this creates credit invisibility problem, right? So restricting
Mm.
access to finance. This is where Rubix will come in and will using the machine learning and using AI driven models, and also using the benchmarks that we built across 260 sectors and subsectors, we are able to pretty much reconstruct financials and risk profiles using alternate data and using all of these predictive models. So, which is what will help fintechs and banks and NBFCs assess the risk of these smaller companies where otherwise they would have gone pretty much blind, right? So here they can still go ahead, basis the intelligence that we provide using all the predictive models, they can still go ahead and take informed decisions. The accuracy levels are also, there's a lot of back testing also that happens. So we've seen that the accuracy levels are anywhere between 75 and 80%. Banks, fintechs, corporates, and I have been using this extensively across.
Mm-hmm.
We do close to, I think, about more than 500,000 company assessments in the year. I
Oh
think
wow.
this year we may end up doing close to about 1 million odd. And that talks about, the impact that we are bringing about on one side and the benefit that banks, NBFCs, and the other segments are seeing in the way they use Rubik's intelligence on companies in India or overseas for decision making. So
Perfect. No, I
lots of
think
use
that.
cases, but
Mm-hmm.
this problem is in. So for a bank, either for lending or if they want to issue an LC or a bank guarantee, if they want to if the treasury or the forex team within banks want to undertake a transaction, any kind of due diligence, any kind of intelligence on businesses is where Rubix will step in and assess, using a plethora of data which is both structured and unstructured in nature. We analyze the businesses, simplify it for them in terms of scores, and other intelligence that enables them take decisions.
Fair. I think this is really an interesting use case. And one thing that kind of stood out to me, just to kind of deep dive a bit more into the lending piece, is when you said this will also enable banks to invest and expand their portfolio in terms of sole proprietorships and partnerships. I think that is essentially also where India's majority of the MSMEs lie. And MSME lending, as we know, is one of the segments which is still being solved for out there, right? In fintech, it is probably one of those domains that has not yet been completely termed as solved, and people are trying to actively figure out how to invest in that. How do you look at that perspective in terms of MSME lending, and how do you see Rubik's adding value there?
See, MSME, everybody, so they, on one side, we look at papers and articles and sessions where they talk about how important MSMEs are for the overall growth of the economy, right? So there is a lot of interest amongst banks and fintechs and NBFCs to address that space and to do it right. I mean, they can't just blindly lend, right? So they have to do it in a way that their money is protected. At the same time, they are able to lend so that they facilitate the overall growth for the MSMEs. And it is not enough if you were to just look at one aspect of the MSME to enable them for decision making, enable them with respect to decision making, right? So this is where what we've done at Rubix is that we, for a particular MSME that is of interest to a bank or a fintech, right? So we look at almost about uh, 120 plus structured and unstructured data sources for information, right? And there are enough and more, right? Just like how you and I leave digital footprints as individuals on various mediums and social media platforms, companies also leave digital footprints. So you need to know what are those and where you can get that from, from basically from public domain, and how you analyze them, and you are able to enable decision making on behalf of your customers. So example being, when you look at structured data, right? So your things like your GST filings, your MCA or your PF and ESIC contributions, your financial data, to the extent that it is made available, your unstructured sources like court cases, your legal data from your Supreme Court, High Court, magistrate courts, to maybe even FIR level data that you can get from different police stations across multiple states, right? Then you have adverse media, you have regulatory signals. You also have import-export data. What is the extent of imports that the MSME may be undertaking, and the export of finished products that they may be doing. Again, important for you to look at that. You also look at behavioral aspects like, what do employees have to say about the company? Customer sentiments. I mean, where customers leave feedback on the company or the MSME. They leave feedback on the product or service that the MSME offers. So you bring all of these data points together, because no single data point will tell you the full story.
Hmm.
However, it is a combination of all of these and more that I talked about that creates a very powerful proxy for the BFSI segment to understand the overall business and financial health of the MSME. So that is what we do. We bring all of this together. And it wouldn't be possible unless you have technology, right? Because
Hmm.
I mean, you need to ensure comprehensiveness of everything that you analyze. You banks, like I said today, they want to take decisions quickly. They are not willing to wait for days, rightly so, for them to take a call on what they ought to be doing with a particular MSME or the company. And given that India is a price sensitive market, you need to do that at a reasonable cost. And given that we
Of course.
deploy technology, we are able to make that happen for our customers and scale, right? So the tech also need to facilitate scale, because given the
Hmm.
number of transactions that happen in a particular bank or a fintech today, it is important to facilitate that. And, that will happen only through technology. So that's what we bring in terms of uh, what we offer to banks in that particular segment today.
Mm-hmm. Makes sense. Makes sense. No, I think this is really a very important use case in terms of kind of furthering the MSME lending problem penetration. Sorry, furthering the MSME lending penetration and enabling more and more lenders to kind of expand into that by providing structured data insights. Uh, Quick question on how the risk score that you provide is looked at. So, how essentially would an organization consuming the risk score provided by an entity like Rubik's benchmark it versus the standard bureau scores that they get in terms of credit risk?
Yeah, brilliant and a very relevant question to Shreyas. Now, the reason why I say this is because uh, the like I explained in your responded to your previous query around the kind of data sets that we look at for analysis. There are, I mean, looking at 120 sources and probably about 600 plus, or maybe even closer to 1,000 plus data elements that you look at and analyze is a lot, right?
Hmm.
Lot to consider, to look at, and to analyze from a company standpoint. And the score that we produce as a result of looking at all of this is something that works like magic for our customers. And I can tell you, because we've been in business for about 8 years, 8 plus years now. On an average, we do about, like I said, 500,000 plus assessments, and maybe more, closing closer to about 1 million odd this year. We also given a very strong presence that we have on the ground with respect to the relationship team, etc. We keep getting feedback from our customers, be it banks or financial institutions or insurers or corporates or what have you. And on one side, our platform is very deeply integrated into theirs. One of our single biggest differentiators, Shreyas, with respect to what our platform provides is not just the one-time risk assessment, but we also monitor
Oh,
uh, those
mhm.
companies for any changes that may happen. It's extremely important in today's time, right? So, um, by virtue of the monitoring that we do, besides the one-time risk assessment, it helps our customers to keep a tab on what is happening with respect to the risk profiles of the entities in question, right? So if the score improves, it gives
Mhm.
them greater ability to perhaps lend more if that's the use case that we are addressing. Or if a corporate wants to transact business with them on credit, if the score improves, maybe they can do more business than where they started, right?
Mhm.
So at the same time, if the score weakens, then you know that okay, you need to protect your money, and so you need to very closely keep a tab on that entity so that you don't lose out if the score was to further weaken.
Right.
And if the score remains the same or within the same band, then you know that you took the right decision. And you just need to keep a tab on what's happening quarter on quarter so that you can take the right decision over time. So
Fair.
the score that we provide is there. It's all tried and tested, and there is already significant confidence that customers have across segments in how they deploy the score into their decisioning process. So the platform talks to the customers ERP platform that they may be using, so
Mhm.
that ultimately the essentially the score that we give is what will result in the ultimate decision that they ought to be taking for their own respective business. And that's, I think, been working very, very well.
Understood. Perfect. No, I think thank you so much for answering that. Having said that, right, I think we fairly understood the impact of this kind of a business in the lending piece, right? And it is definitely impactful in opening up new avenues as well as expanding portfolios for the existing lenders. Uh, let's take a pivot here and let's talk about how do you see this affecting the insurance space? Where do you see the use cases? And probably you can enlighten us on some of the more interesting use cases in.
Sure. So insurance, as we speak, is highly underpenetrated in India. There is incredible scope when it comes to insurance, especially for trade credit. Right. If I remember right, the number of policies issued by the domestic credit insurers is not more than, I think, 500 odd. Imagine a country as big as ours, and if there are
Mhm.
just about 500 odd corporate policies, that's way too less with respect to what you ought to be doing. So there is
Definitely.
incredible demand, and I think the insurers are doing a fabulous job in terms of looking at ways and means to expand their sort of portfolio and coverage. Second is with respect to export credit insurance, right? So that's essentially the likes of ECGC uh, that sort of dominates the space. Of course, there are others as well, but they issued the a maximum number of policies in this space. So, given today's times where there is geopolitical risk, where ECGC on one side has to issue a policy to an Indian exporter by underwriting the risk of the buyer overseas, right? So it's extremely uh, uh, difficult on one side, but at the same time important for them to know what's actually happening with the overseas counterparty before they decide whether they can go ahead and issue the insurance to the Indian exporter, and at the same time decide on what kind of limits they can provide to the overseas buyers. So that is one use case where we step in, where we provide intelligence on businesses overseas that enables export credit insurers to decide two things. One, if they can go ahead and issue the policy to the Indian exporter, and two, in terms of what should be the limit they can safely extend to the buyer overseas, so that both of these get protected and measured and monitored as a result. Likewise, with respect to the domestic credit insurers, they again issue policies to Indian customers because who transact business on credit, right? So they
Mhm.
end up working with a lot of SMEs, MSMEs, corporates in India, and so before they transact business, these kind of domestic credit insurance policies help them, because they can transact business without stress because they have a policy to support. But at the same time, before a policy is issued, Rubik steps in by doing the same thing as we do for the export credit insurers, except that we do this in the domestic context. So we assess the risk of Indian MSMEs and SMEs and provide them with a score. And we also recommend a credit limit that
Mhm.
a limit that they can extend to the buyer of the corporates in India. So again, helping them address two things. One, whether they can go ahead and issue the policy to the Indian entity or not, and two, if yes, what can be the limit they can safely consider, so that uh, uh, you know the the insurer can also sleep easy because the risk is monitored for the most part when it comes under the Rubik's portfolio. I mean, and at the same time, they have taken an informed decision with respect to the buyers in India, before they decide whether to issue the policy to the company or not. So that's how we support insurers, and it's a huge space.
Definitely.
Again, they want us to assess. When we assess a particular MSME or SME comprehensively, it gives them the confidence that we've looked at pretty much everything before we assess the overall business risk of that particular entity. We are able to, given technology, we are able to do as many assessments as they may want in a particular day or in the period in question. We are also able to provide that as at very good at a very good price of commercials, because India is a very price sensitive market, and we are able to turn it around also pretty quickly in a matter of a few hours. So that actually helps them in effective decision making stress.
Definitely. No, I think this kind of solutions are more and more required, specifically for segments such as insurance, which is, as you rightly mentioned, very highly underpenetrated across retail as well as the B2B part, right? Trade credit, the ECGCPs, and all of those pieces are also uh, kind of widely away from the saturation point, and these kind of essential intelligence or data services will essentially help that segments grow faster at an exponential rate. Having said that, I think we've covered a pretty good amount of use cases in the BFSI segment. Would want to kind of quickly pivot here and would want to understand a bit more about what goes on behind the scenes in data science. Since you are an expert in that field, would love to hear from you. One, essentially, do we what do we kind of insinuate when we say you are building in data science? What actually happens behind the scenes? And would love to kind of deep dive into this with you a bit. Over to you.
Yeah, so it's like, I mean, simply put, what is data science? Data, I mean, and if you were to break both of these, data is all about facts, it's about numbers, it's about signals, with respect to transactions, as an example, GST filings, payments, so on and so forth, right? So that's all about uh, data, any kind of data, structured, unstructured data, that I also referred to in my conversation earlier. Science is all about, the methodology that you're deploying to analyze these patterns. Could be statistical methods, it could be algorithms, it could be models that you build to analyze this data, right? And the outcome that you expect to derive out of this is all about insights that you can derive and generate, which will enable decision making, which is far more better and faster than before. Right. So essentially, data science, in summary, is all about patterns in data that you assess in order to predict outcomes and also guide decisions, for customers. No, so therefore, so that is in short about what data science is and what we do.
Hmm.
Uh, 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 so there is a lot of data that we work with, that we play with, right? And like I mentioned earlier, it's not just about one-time intelligence that you want to provide to your customer. If it was in the BFSI space, if a bank or a fintech is looking at lending to an MSME, you look at all aspects of the business and you provide them the intelligence along with the score, etc., basis which they decide. But how do you know if the credit worthiness remains the same 1 quarter down the line, or let's say half yearly, uh,
Hmm.
uh, uh, from the time that you took a decision, etc. So therefore, monitoring comes into play, which in fact puts a lot of pressure on us, because you cannot virtually leave out anything when a company becomes part of your portfolio that you're handling for your customer, right? So there could be
Hmm.
payment delays, there could be court cases, there could be compliance defaults, and it's important for the platform to track these changes in real time, to flag these improvements of deterioration, as the case may be, right? So that you end up reducing the exposure on behalf of your customer, before any delay or defaults happen, right? Or you enable them expand their business safely with, let's say, counterparties that are improving in terms of their overall score. So essentially, a lot of data analysis that happens in the background. And trust me, Shreyas, none of this would have been possible without technology. I know the kind of effort that the tech team, has been putting along, working closely with the product guys,
Hmm.
in terms of continuously revamping the models, revamping the tech, that goes behind the show, right?
I'm sure.
It's not. You have to be fully committed to what you do. Only then will you be able to justify all of this, so that your customers can sleep easy when it comes to their decision making in the B2B space.
Fair, fair. No, I think that is a very valid point. And when you kind of speak about constant monitoring, it actually becomes difficult because you're constantly tracking chaos. The media information that comes in, or any kind of this kind of information that you're talking about, the sensitive information, does not come out in a systematic manner through a single feed, right? You have to monitor multiple sources. You have to monitor multiple input layers across the domain. That kind of is almost equivalent to monitoring chaos and making sense out of it for your customers. And I think that in itself is an impressive feat. Uh, Having said that, right, in today's AI forward world, wherein everyone is talking about how they are using AI to kind of do this and enhance their business. Uh, what is your view on that? Since you also mentioned using AI at certain interjections in your business earlier, very briefly. So would love to hear a bit more about you on.
Yeah. So in fact, I explained to you what data science is all about, right? And AI is
Right.
all about tools that you bring in to analyze a variety of data, both structured and unstructured data, simplify it, get it to a stage where it is easily understandable and comprehensible for customers so that they are able to take decisions. I'd like
Mhm.
to, touch upon also, with respect to given this is largely a BFSI focused discussion. I'd also like to, touch upon what BFSI and essentially fintechs are fundamentally attempting at doing, which is essentially trying to democratize access to credit, right? And without, the data science techniques that we are able to deploy, or the overall tech and AI, etc., that we deploy. This it's a combination of both. One is you need data science and AI, but at the same time you also need data, to make sure that the decisions are right, for your customers. So you look at alternate data, you do a lot of predictive analytics. That's where AI and data science comes in. There are also a lot of digital workflows, right? So today, a lot of information in public domain is not available on paper. It's there in different digital workflows, like your legal data, or your statutory data, or your financial data, or even unstructured data. It's all available through digital workflow. So all of that will need to be brought in when you analyze. And using a combination of all of this is how we are able to underwrite, or rather, banks and the BFSI folks are able to underwrite essentially thin file businesses where data is
Mhm.
not in abundance, much like the bigger companies. It's important for them also to reduce dependency on collateral and expand the credit inclusion in a big way, right? So that is something that even the government and the regulatory bodies keep talking about, where you make credit extremely inclusive. So Rubix, by virtue of the AI tools supported by the data science methodologies that we've deployed and that we put in practice, it pretty much acts as a backbone in enabling this transformation for the BFSI space, Shreyas.
Perfect. I think thank you so much for answering that. I think well, we're almost about to run out of time. One last question before we kind of part ways. Uh, in terms of use cases that you have observed till now, in the next couple of years, coming years, which is one use case that Rubix as an entity would be keen on pursuing or solving for in the industry? It could be any industry inside or outside BFSI.
Yeah, so so what we do, Shreyas, is industry agnostic, right? So you look at industries across, whether it is logistics or manufacturing or healthcare, or yeah, any of these, or metals, what have you. Everybody has, they when they work with counterparties, either a supplier or a vendor or a customer or a dealer or a distributor, they would want intelligence basis which they are able to take informed decisions, right? So this, what we are doing, cuts across industries and segments that we can serve, right? So anybody and everybody that we know of will need what we do at Rubix. One. Second is the very fact that we're working with almost 2,000 plus customers today, again, cutting across corporates, BFSI, fintech, NBFCs, etc. Talks a
Mhm.
lot about the utility of what we've built and how we've deployed it effectively for our customers, right? Thirdly,
Right.
like I mentioned earlier, India is on a significant growth path, right? And on one side, the economy is growing, and on the other side, there are of course aspirations to make it much much bigger. If we have to be amongst the top two, right? Imagine the kind of pace at which we need to grow, right? And it is important for the growth engines to take decisions in an informed manner, take decisions at I mean in a fast paced environment, and all of that is what we are attempting to do, right? When it comes to BFSI, again, they will have to lend extensively. They'll have to,
Mm,
when it comes to giving them guarantees, be in the form of bank guarantee or letter of credit, etc. They will need to do that in a fast-paced manner, right? Look at even onboarding that banks and financial institutions will need to do. There are more and more corporates, newer corporates that are getting registered. MSMEs, small companies are getting to become much bigger. Bigger companies are becoming large corporates, and so when this transition happens, the BFSI segment also ends up onboarding a lot of these corporates, which again will need to be done with a fair bit of diligence,
mm,
much like what we do at Rubix. So,
right.
industry wide, I think we are seeing incredible utility. There are enough and more use cases that will need, support from, let's say, platforms like what we do at Rubix. Our parent company is Viana, which is largely in the supply chain finance domain, facilitating availability of finance to corporates and MSMEs through different products that we serve. So Rubix and Viana, we work very closely in facilitating a lot of these or in addressing a lot of financing needs that
Mm,
MSMEs in our country have. And I think it's going to be we've just started is what I although we've been around for 8 years. When we discuss internally, we talk about how uh, we've pretty much just about started, and we have a long way to go because
definitely.
it's going to be an incredible journey that I'm sure that I'm quite certain about.
No, I'm sure. I'm sure. Mr. Mohan, I think this conversation was really insightful. Thank you so much for sharing your insights and taking out the time on a Saturday afternoon. And I'm sure the audience is going to love all the insights and the knowledge that you've shared with them. And all the best to you and the team at Rubik's Data Science for your future endeavors. I think you're going to be one of the leading players in the industry, and looking forward to keeping in touch with you. Thank you so much for doing this
Thanks,
with us.
Riyaz. Thoroughly enjoyed our conversation. Good luck to you too, and look
Likewise,
forward to interacting again with you soon.
definitely. Thank you so much.
Bye. Bye.